Good morning, everybody, and this is your S&P 500 day trade setups for today. And we pretty much did nothing yesterday as expected, just ranging between the levels I gave you yesterday. Bear in mind, we've got the Feds coming out on Wednesday, and then this is a massive week for earnings. So all the big stocks, Google, Amazon, Facebook, are all coming out with earnings today. This week, sorry. So uh, what you're seeing at the moment is a reflection of that. So the first part is the Feds, what are they going to do? And then the second part is the earnings that are coming through. So nothing really going on, just pure range-based trading. Now at the moment, if you look at the oscillators on the 8-hour, they are separating, which is quite interesting. We are hovering above the 155 here, and the oscillators are easing off quite nicely. We've got a crossover of the faster moving averages, so good potential here for a trend reversal. If we start dropping below these levels, and we'll get to them on the lower time frames, then you would expect a bigger move to the downside. But for now, more than likely, something like this is brewing. So big channel. In other words, what we would expect is still a little bit of a pullback, and then a move up, pull back, move up, pull back, move up. So that's the one scenario. The other scenario is that the channel is a little bit steeper, and something along the lines of that. But either way, what we're looking for is, at the moment, we are looking for opportunity to buy into this. If you look at what's happened to the oscillators here on the 3-hour as well, we have eased off to the downside here. It does look like a bit of a head and shoulders forming, but for all intents and purposes, moving averages are pointing up. We are above the moving averages. Oscillators are grouping to the downside. Everything is indicating that we are looking to buy off a level, whether it's this one where we are now or a little bit further down. So let's look at what we are looking to trade today. So the first one is, I gave you this level yesterday, which is 39.49, 39.50, and you can see how we kept bouncing off this all day yesterday. We rejected the top level, which is 39.65. That is the range that has formed, in my opinion, at the moment. We don't have any indication on the oscillators of what's going on at the moment, but then again, we do have another level to the downside of 39.21, and also remember 3900 is also a level we need to pay attention to. So until we start breaking through these levels, I am a clear sit on hands right now. Not interested in getting involved in this, not interested in risking any capital when we are doing this kind of price action on the 15 minutes. You can see above the moving averages, below, above, below, above, below. That is range-based trading. It is confusion, and I have no interest in getting involved in that. So for me, looking for break and retest of 39.50, that should attract these two levels to downside. That'll be 39.21 and 39.07 and 3900. That would be the first level. We start breaking above here at 39.85, then I'd be looking for 4,000 as my next level as a minimum. So yeah, that's kind of the structure that we can see at the moment. And I just want to quickly have a look at the earnings calendar, because today is Microsoft and Google. So a massive day from a market cap perspective. So and obviously Visa there as well, which is a big one. And then you have on Wednesday, you've got Facebook, Qualcomm, and T-Mobile, which are the big ones. And then you go into Thursday, which is Apple and Amazon and MasterCard, Pfizer, some more big ones, and a lot of other companies that are coming through with earnings. And then Friday is ExxonMobil and Procter & Gamble with Chevron, and then quite a few other organizations as well. So there's a huge amount of companies that are coming through with earnings today. Yesterday was quite muted. Earnings were pretty good for the 2, 4, 6, 8, 9 companies that announced earnings on Monday, but for the rest of them at the moment, it is going to be a busy Tuesday. So yeah, I think pay attention to these levels. That's going to be the important thing. So I think you may find some squirts if there's some really good earnings coming out from some of the organizations. You probably find some squirts up. I don't think there's going to be any surprises, to be honest. I think if I look at what's happened last week and yesterday so far, more than 80% of the organizations are hitting or exceeding forecast. So that's kind of the trend that I think is going to continue. So, yeah, interesting times ahead, but I am a sit on hands person right now. I'm not interested in getting into this until we see a clear break one way or another. So at the moment, you can see a series of sort of lower highs forming as well. And lastly, the advice I do have for you, if you've got the time, and we do get structure on a 5 minutes or something like that, that would be the one to pay attention to, or your 15-minute charts. But if they're doing this kind of thing on the lower time frame as well, I drop down to 3 minutes as well. You can see above and below moving averages. That's a clear sign of stay away. Don't even bother trying to jump in on something like that. Let the algorithms do their thing and wait for the direction to be chosen and then jump in with the direction. Okay, so anyway, I'm sit on hands, not interested in this, and my bias is still to the upside based on what I'm seeing on the higher time frames. But until we start breaking above 39.65, I am sitting quietly and waiting for this to happen. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.